Hello, John McConnon here with winnerscheck.org. These are our model disclosures. We've already talked about in previous videos and previous information in the community what a solar loan is, what a power production agreement is, and what a lease is. There's also outright cash ownership. There's probably hybrids of these things in the marketplace. And we talked about the fact that a seller can either pay these loans or PPAs or leases off, or they may wish to try to sell the property contingent on a buyer being able to assume the loan PPA or lease. The agent should be working with the seller, gathering up the documents, seeing how they can be transferred, seeing the requirements for potential buyers, marketing the property in a way that's most likely to realize the highest net for the seller, if that's what the seller wishes to achieve. And consequently, especially on these assumption situations, they may want to make sure that they have a buyer who's not just stretching themselves to get in at the tip of their payments. They're probably going to need to show some extra buying power or a much bigger cash reserve. So all that's going to go into the marketing and the selling and getting under the contract on the home. But now we're going to move closer to, we just consider, stop the video, cover some of these, or actually review the prior videos in our course. But let's get to the addendum. So the first thing we're going to consider in upon transfer is we're going to consider whether we're making the purchase contingent on the buyer's assumption of the loan or the lease. And if we are, we're going to want to include some sort of addendum, which really means extra paragraphs, that say buyer must qualify for the loan or the lease or the PPA within X days prior to the close of escrow, or, and this is where thoughts with the seller should be considered, the contract can be canceled at seller's option, or the contract can be extended for 5 days at buyer's option. I mean, you could put in a lot of things there depending. I mean, this is why it's important to work with the seller's vendors and find out how long is it going to take. Do they always figure it out in 10 days, or does it sometimes take a month? And those are the things you're going to want to build into your assumption language early on. Now, if you're a seller, it can be canceled at seller's option. But that might seem a little bit onerous by buyers. So, you have to consider the markets and consider your buyer when drafting this, and certainly in strong consultation with the seller. And for realtors, maybe with your broker, or maybe even with your in-house attorney. I think that most brokers are going to want to review this, and you're probably going to want to standardize this and incorporate these concerns before you go out and do your first deal. And if you're a member of our community, you will see we'll have some samples that you might wish to use. Or in California, we'll show you how to set it up with the California standardized forms, the forms promulgated by California Association of Realtors. So now, and this is something you might want to build in, if you could say the buyer cannot qualify after, with these, and then the buyer will agree to carry back. Or, buyer might not agree to that, but that's something to consider with the seller. And if it is going to be something the seller wishes to do, I would put this in the listing somewhere in the disclosure so that the sellers, it's always better to disclose. And when we get into that, we'll go into that another time. But when talking about in our negotiations course and our transactions course, disclosing later can scare people. Disclosing early, in many cases, might not even hurt the seller in terms of the net they may wish to achieve. So it's always better to disclose early, or not always, but almost always. Now, the next thing this should be easy if you've been following our recommendations, because as an agent, you've already had the seller gather all these documents, and you've already got it, and you've got seller's permission to disclose them. And the seller should deliver to the buyer all the documents in the possession related to the lease or loan, and let me type that in, and the solar equipment. I mean, there may be warranties or guarantees that transfer to the buyer, and the buyer, that could benefit the buyer, and by having those things, it may benefit the eventual net of the seller. So I would also consider showing before and after power bills, but I would put a disclosure on there saying, utility rates and billing and time can cause these bills to vary. Your usage could vary. Like for instance, I have 4 kids, 6 people in my family. So we have pretty high power bills in California. I would not try to say, by the way, you're going to say if you assume our lease, in which case I don't really have a lease they can assume, but if I did, you would save $200 a month. I wouldn't say that. I would just say, we saved a lot of money and you might, and I'd explain how we saved it, but their usage could vary. Because I don't want to make the mistake of anybody being an interpret, any buyer being able to interpret and say, I'm going to save $100 a month or $200 a month off what my bills normally would be, because everybody's different. So anyway, that's what I'm saying. So you're not going to guarantee future performance of your seller, and you're not, and this might be important, you're not giving any sort of warranty with respect to the equipment not breaking, or how long it's going to last, or future production, or the operational life of the equipment. All these things can vary. And when I was buying the solar equipment for my home, I learned all about the different companies giving different warranties, and some companies are stronger. And even as I was buying, some companies were going out of business. So it's not just, your local solar company that whose warranty might be important. It might also be in the end, you might only have the equipment manufacturer's warranty, and even equipment manufacturers might not survive. So it's a constantly changing industry. And as a seller, you don't want to be on the hook for things that third parties promise. So you don't want to say, oh, it's a 20-year guarantee. You want to say the vendor guarantees for 20 years, or the equipment by the equipment manufacturer is guaranteed for 20 years. And then you would also say, and by the way, you might want to review this paperwork with your attorney or your advisor. So we know we want to give, we'll worry about that later. So we're providing the lease and loan agreement. We're providing the solar equipment that we have. Now, seller must deliver to buy. Okay, so here's just another addendum you might want to put in there to get this. You want to use a model. We have these things in California, but you want to use it as a model. You might say seller must deliver to buyer, like the other disclosures in the contract, the other paperwork in the contract, deliver this information to buyer within X days of the signing the contract. It might be 3 working days, but I think a good practice is to have it all gathered up ahead of time, and as soon as the contract's accepted by the seller, the buyer's agent should shoot it over, a bunch of PDFs by email and ask for them to confirm that they received it. You might want to even give them out. I like it when I'm working with buyers. I like it when all this is disclosed ahead of time. It might be disclosed at an open house. It might be disclosed prior to even a contract coming over by the seller's agents. When, if your buyer's agent calls the seller's agent, just send over all the disclosures. I mean, it can all be, I like disclosing ahead of time. I think it helps the net for the sellers rather than it being a shock later. I would definitely include provisions in my disclosures that said the buyer's duty to investigate the system, how homeowners insurance might affect them. They might want to understand how the maintenance, output, and production guarantees work. And again, that seller's not guaranteeing them, these vendors are, and that these vendors and the equipment manufacturers are who they're going to have to look to. Your payment schedules for loans may change over time. They may be, there's some agreements in California where it looks like the money is just being collected the same way property taxes have the money collected. You might want to explain how that works. I would put something in there that there's no guarantee that the electricity company is still going to bill the way it's currently doing. Like I know in California, here in San Diego, one of the reasons I recently did it, I want to get my solar on the roof by December because it gave me 5 years of getting paid twice as much for the power I'm producing during the day than I will. It's still not a lot than I will be though in the future. So that's one of the reasons normally you don't want to go way over on your power production because you don't get that much back. But if you do go over, you get twice as much. Because I got it on my on the timing, I get twice as much back as I would be if I did it this year. But again, that's not a big deal for people because they're trying to match they're frequently trying to match output with need. But there are other things like I know in 5 or 6 years in California, there's this thing. It looks like the power usage, and it used to look like during the day it was a lot of power being used by customers of SDG&E, and then the evenings it cooled down. It died down. So people were like, do your laundry in the evenings, but they realized that because of power, because of solar and people's usages, the power need curve is switched far into the evening. So they're changing those billing hours of their high rates, and that may affect people producing solar. So that's why you want to have a disclosure in there saying, your electricity company may change the way they bill. It may affect how much money you save with this system. Now, this is something I was considering as I wrote this. You might want to disclose. I mean, if you're really trying to be safe, you might want to disclose the risk of power production because of climate, because I've noticed in my own power bills. I should have pulled them up. I'll pull them up in future videos. On cloudy days, I can have like a quarter to a third of the production I have on a sunny day. And I'm hoping that my production during the winter, because the hours of sunlight are lower, I'm hoping my production in the summer is 2 or 3 times higher. And I'm about to find that out. I got to talk to the sales guy, but I was not entirely impressed with my production in January compared to what I'm expecting to get over the course of the year. So these are things that you can't oversell if you're a seller. You wouldn't want to, and you'd want to disclose these things just to avoid any liability. So you might want to talk about the fact that climate change, like clouds, could affect how much money they save. Or I saw something on Drudge. The magnetic poles may be shifting. Now, the actual full shift might not happen for a long time, but they're thinking they could be shifting now, so that might impact. So climate change might impact how useful solar equipment is. And I will go into climate change some other time, but I know that the authorities would probably like that disclosure. Not that I'm thinking it's necessarily. I'm not going to get into it. I don't know. Do you want it? This is the lawyer in me, but if it's only it's a cost of some digital ink, might you want to disclose that earthquakes, hurricanes, and natural things may affect their power production because the equipment might get damaged. I'm sorry, I clicked through this when I was trying to go forward. Okay, so now other things to consider in your addendum. Buyer should provide notice, disapproval. Well, basically, what I'm saying is you probably want to adopt like in California, there's an inspection provision, and you might want to mirror that with respect to the solar equipment. So if they're not happy with their inspection, they give notice within the contingency approval time. Now, we will again go over that in more detail in webinars and if you have questions. But I think it would be fair. I think it's pretty fair to say if they're not happy with the inspection, they should get the inspection during the inspection time that they have for the other parts of the house. And if they're not happy about it, they should give you their inspection disapproval, or then otherwise the seller in California would be able to give a notice to close down the contingencies. So I would mirror the buyer's. In short, I would mirror the buyer's duties with the inspection contingencies in the contract. Now, if you don't have inspection contingencies in your state, you might want to say that buyer will voice their disapproval and send a written notice within X days of the receipt of materials by buyers or buyer's representative. I think that's fairly straightforward, but if you have any questions, let me know. Again, though, if you're not in California, I can't really give you my legal opinion I can give you my general contracts understanding, and that is you want to have all contingencies considered. And so that could be, what happens if the buyer doesn't, well, we're going to get into that. In short, it suggests that the inspections mirror the other periods. Now, you might also want to say within 2 business days, buyers shall begin qualifying for the loan or lease and shall cooperate fully and shall supply the necessary documentation to the lender or the solar lender. Let's call them the solar lender or the third-party solar owner, which would be the PPA, the power production agreement, the power production provider, or the person providing the equipment on a lease, so the lessor. So you'll really want the buyer to get moving there, and you probably want to put some duties on them. So I would sort of continue. I would consider mirroring the loan contingency, and in other words, that they use their best efforts to qualify, and they do their due diligence, and they provide the necessary documentation for qualification for that loan, so they can assume the loan or so they can assume the lease. Now, that brings up issues like, what if they're qualified but they don't give notice that they've qualified? Well, that's why we would say something like in California, we might say the buyer must waive the qualification of contingency X days before the close of escrow. So you might want to give them, because it might take longer. So as a seller's agent, you'd be in touch with the buyer, with the seller. You'd talk to the seller, maybe through the seller or with the seller on the phone, or because the seller gave you power of attorney to contact them, you contact the lender or you contact the lessor, the power production provider, and say, how long will it take? Will you get this done in 5 days or 10 days or 15 days? And if it's going to get close after you figure inspections, after they have to, 2 days to start up the paperwork or 3 days, and then it's going to take them 20 days to get approved. On average, it can take longer. You already know that. So now you want to put this contingency that buyer must waive the qualification contingency within X days before the close of escrow. So you might say the buyer basically must say, hey, we're going to go ahead and close within 3 days of the close of escrow. And if they don't, then I would suggest it mirrors the loan contingency. So if they haven't done that, then the seller can go ahead and give them notice to close the contingency. And then if they don't, then the seller can cancel or frequently the buyer, if they're well represented, will cancel before they even have a chance or a risk of losing their money, their deposit money, or their good faith deposit, depending on how your state considers it. So again, the thought is that you need to make that seller, that buyer, perform and try to qualify for that assumption. And if they don't, they need to notice that they have not. So you could cancel the escrow if you want, or you could work something out more in writing with them afterwards. Now, that's why if you go back, if they don't qualify, you might want to consider, as I said earlier, you could say if you don't qualify, you could carry back. And again, this is going to depend on how you're probably going to want a strong buyer, because if the buyer's not strong enough to do this on their own, the buyer's lender might not be happy about this kind of loan. And it certainly might become difficult to bring this out at 3 or 4 days before escrow. So you're not going to want to waste any further time. So if I'm representing the seller, I'm going to gather up all the information. I'm going to talk to my provider, my third-party owner, or the lender. Gather all that up. Then I'm going to talk to various lenders and say, this is the situation. Is your buyer going to accept a carry back? How do we disclose that? If you were representing a buyer, how would you suggest we disclose this? How do you suggest we carry back? Or how do you suggest the language that you will find acceptable for there to qualify for the assumption of this loan? Now, there are PACE programs and other things in California you have to consider too that we're going to discuss in videos, but this is absolutely the time, is early on, nail down all these things. This is the reason for this course. I saw all these issues when I was getting pitched these homes, and in the past when I've sold homes with solar on it for people, and I was like, we've got to get ahead of this. The seller needs to market this properly, needs to get as many variables out of the equation as possible, have a process for the buyers to go through, understand what the buyer's lenders are going to consider, understand what the seller's lenders are going to look at, or the seller's solar home third parties are going to consider, and nail this down ahead of time, disclose it, market it well, and close. So there's a lot of work involved. Not a lot of work. There's a lot of due diligence involved in the beginning to make this process work well. And we are going to cover those things there's just so much more to cover. We're going to cover buyer's failure to qualify in in subsequent videos. We are going to, we've already done it. If you've already been through it, you've seen all this information that you want to acquire in the beginning. So anyway, thanks for coming. I hope you appreciated this module. Leave your questions below. We're going to do webinars on this. And thanks. John McConnon, winnerscheck.org.